Everyone, welcome to my YouTube channel. In this particular video, we'll solve one more problem related to earned leave salary. Mr. X retires on 31st October 2022. After 20 years, he has served the organization and received 48,000 as leave encashment for 12 months. So for 12 months, he has got the leave encashment of 48,000. His employers allows him 1.5 months of leave for every year. So that means 45 days. But according to IT laws, only 30 days will be considered for the calculation of tax. He has already encashed the leave for 18 months. So totally he had already once he had encashed the leave for 18 months. And again he got 12 months of leave encashment. His salary for 2021-22 was 3,000, and from 1/4/2022 it was raised to 4,000 per month. Compute the taxable amount of leave salary for the assessment year 23-24. So we have to draw a table like this. The first one you have to write the actual EL received. What is the actual EL he has received? So he has received total 48,000 as leave encashment. So 48,000 is the actual leave received. Less. Least of the following is exempted. So there are certain exemptions, least of which will be exempted. So what is the first exemption? First exemption is actual earned leave received. Actual earned leave received. Actually, how much he is receiving? He is receiving 48,000. Next, maximum amount of 3 lakh rupees. Maximum exemption will be given up to 3 lakh rupees. The third one will be 10 months into average salary. 10 months into average salary. We have to find out the average salary. So we have to calculate the salary. So when he is getting retired on 31st October. So from 31st October to 10 months before. So October, September, August, July, June, May, April, March, Feb and Jan. 10 months. So what they have told in the question is, yes, his salary for 21-22, that is from first a full complete year, 1st April 2021 to 31st March 2022, it was 3 months. From 1st April 2022, it was raised to 4,000. See, from April, it was raised to 4,000. So April, May, June, July, August, September, and October, I have written 4,000, 4,000, 4,000. Before it was 3,000. For the remaining months, I have written 3,000. When I add everything, I will get the total salary, that is 37,000. The total salary is 37,000. Now, in order to get the average salary, you need to divide that by 10 months. So 37,000 divided by 10 will be 3,700. So 3,700 is the average salary. So 10 months into average salary, if you do 10 months into 3,700, it will be 37,000. Next, fourth exemption is approved period into average salary. Approved period into average salary. So, how many years he has completed his service? 20 years. So, we need to calculate now the approved period. First, leave entitled as per IT laws. So, he has completed 20 years of service. So, each year he will get 1 month as EL. 20 years into 1 month will be 20 months. Less leave availed by the SSC. Leave availed by the SSC. So, what is the leave availed by the SSC? Let us check the question. So he has already encashed the leave for 18 months. So for 18 months, he has already taken the leave. So 18 months is the leave availed by him. So the remaining how many months is that? 2 months. So that 2 months is the approved period. So 2 months into average salary. Average salary we have found out it is 3,700. 3,700 into 2 months is 7,400. 7,400. Out of these four amount, whichever is lesser will be given as exemption. 7,400 is exempted. So from 48,000, if we exempt 7,400, his taxable earned leave will be 40,600. His taxable earned leave will be 40,600. This is how we need to solve the problem. Hope you have understood how to solve the problem. In my further videos, I'll come back with some more problems related to earned